Good evening and welcome to our Chair of Trustees and Chair of Finance annual update. This is slightly different this year in that we are running it as a webinar due to the current restrictions, but our intention is that this goes back to being a face-to-face event, as we know that you get added value in networking with each other. I hope the technology is behaving itself for everyone, and just to explain that we are recording this webinar and you will be sent a recording of it tomorrow, which you can share if you wish with your colleagues, and we will send to those that wanted to but couldn't attend tonight. You will see on the right hand side of your screen a facility to enable you to ask questions as we present. Please send this over and we will answer them as we proceed and pick them up at the end, or indeed send a transcript of the answer with the recording tomorrow. So the webinar is due to end at 7:30, and tonight you have two speakers, David Brooks and myself, Michaela Johns. We are both directors at HWB and specialise in academies. I will put up the first slide now, which will take you through what we're going to cover tonight, and then I will hand over to David.
Good evening, everyone. My name is David Brooks. I'm a director at HWB. I look after 9 academies as their external auditor, and I also head up our internal audit service. We'll talk about internal audit later. The first thing I want to talk about tonight is the changes brought in by the Academy's Financial Handbook 2020. This was issued by the ESFA in June this year and became effective from the 1st of September 2020. First thing I'd like to talk about is governance. 3 points to cover there. The first point being that it's now a must that trustees take responsibility for the sustainability and ability of the trust to continue as a going concern. Now, the Academy's Financial Handbook, if you've got the electronic version, has numerous links, and one of those links is to a fact sheet on operating as a going concern. Really, that covers the meaning of going concern, what it means for auditors, the difference between short-term and long-term going concern, the importance of looking at your income reserves to make sure that they are sufficient to carry on over future years, to know your financial position at all times, and to also challenge financial information that's provided to you. In terms of going concern, this has become a very topical matter for the ESFA. As auditors, one of our requirements is to look at the ability of the trust to continue as a going concern over 12 months from the date we sign the audit report. So we have to look ahead at financial information. I think most recently that in recent years there's an increasing trend in audit reports to have what's called a material uncertainty, which is where the auditors have concerns about the trust's ability to continue as a going concern. And certainly the amount of work that's done by auditors on this is increasing year on year. So I think for the first point here, it's important that the board minutes do consider going concern on a regular basis, and that the trustees are noted as considering short-term and long-term viability of the trust, and also to challenge the information that's provided by the school staff. The second point on governance is that members must not be employees. I think it's always been the case they shouldn't be employees, but it's also been now extended to unpaid voluntary staff. So members must be completely separate from the trust. And the third point is that members must be kept informed about trust business. Now, ordinarily members sit above the board and act in the same way shareholders act in commercial limited companies, and that they really only act when something serious happens and they have to pass resolutions for changing articles or dismissing directors, etc. So I think it's important now that, for example, board minutes are sent to all of the members so they are kept up to date with what's going on within the trust. Moving on, the clerk to the board. last year it was a recommendation, best practice, that the clerk should be, the board should be appointed. This has now been extended to become a must, and a must means it's compulsory. So if there's any academies that out there that don't have a clerk, then they need to appoint a clerk. Now, the clerk cannot be a trustee or the principal. It can be a school employee. It can be a third party, either professionally or voluntarily, or sometimes local authorities offer a clerking service. So again, it's something that if you haven't done already, you must minute shortly to make sure that's put in place. The next point on register of interests, this is now a must, that register of interest must be kept up to date. I will say that quite regularly in our audit findings report, we do make, under the regularity section, observations that registers of interest are not up to date. So it's now a must, so I would suggest that this is minuted and made sure that the register is kept up to date on a regular basis. Next point, accounting officer and chief financial officer. Again, this is it's best practice, and it would be a must, but there's one reason why it isn't, and it's that generally the accounting officer and chief financial officer should be employees of the trust. Now, I think there's one exception where that might not be the case, and that's where there's an emergency situation and an interim is drafted in. Now, if that interim is drafted in on a self-employed basis or through their own limited company, then it's now a must that the ESFA permission is given for that appointment to be as a non-employee before the appointment takes place. Moving on to general controls and transparency. Fixed asset register is now a must that all academy trusts have a fixed asset register. Now, I've yet to come across an academy trust that didn't have a fixed asset register. The one thing I would say is that we do regularly come across fixed asset registers which are not up to date. They haven't been updated for additions during the year or disposals or depreciation. Again, I think sometimes, depending on the competencies of the accounting staff, they prefer to actually leave the depreciation to the auditors, but it is important that it's now a must that a fixed asset register is in place. Pupil number projections. Again, this isn't really a best practice. It's now a recommendation that the board should challenge pupil number projections and should look at these on a termly basis. Again, pupil number projections are very important because obviously pupil numbers do impact on the general annual grant you receive, and then any inaccuracies in projections leading to your income, which are inaccurate, could obviously create financial problems in the future. On that point, the annual school census information is due to be submitted to the SFA by the 28th of October this year. That involves showing all the year groups and the numbers, and it may be that for board meetings going forward, you actually minute that the school census has been reviewed and approved by the board, and then thereafter in board meetings the pupil number projections are reviewed and if necessary challenged. The point on integrated curriculum and financial planning, again, this is considered best practice. It's actually not a must, but it is encouraged. Integral curriculum and financial planning really and truly is inherent in every academy. It's really the design of a curriculum that's cost effective and affordable rather than efficient, and it delivers the best possible education outcomes within the available finances. Now, I'm sure that obviously school staff and trustees obviously either informally or formally do follow that process. I think where the ESFA are concerned is they think there's been a very poor take up on the guidance and tools and use of outside services to actually make this a formalised process. So again, I would suggest that perhaps at the board meeting this matter is taken up. The SFA did issue the 7-step guide to integrated curriculum financial planning. Again, there's a link to that if you've got an electronic version of the AFH 2020. Bank accounts. It's always been the case that academies are not allowed to borrow. But within that, it could be that a lot of academies have numerous bank accounts. It's now a must that all bank accounts must be in credit at all times, so none of the bank accounts of the academy should slip into overdraft at any time. Employees with benefits over £100,000. The requirement now is that from this year, the note to the accounts, which shows the bandings of employees over £100,000 in £10,000 bands, and also remuneration of trustee employees, must be replicated on the Academy's website. Now, this will be effective from the finalisation of the accounts for 31st of August 2020. Ordinarily, that would mean that sometime on or after 31st of January 2021, the website is updated with a replica of the note to the account showing any employees, not the name of the employee, but the bandings over £100,000, and similarly the same for trustee employees, regardless of their remuneration. Point on alcohol. This has been a sort of something that's been discussed over numerous years. It's been very much a grey area. The SFA have now come out and said that is now a must, that alcohol must not be purchased except for religious ceremonies. So that is clear. It's a definite no-no. Whistleblowing. The whistleblowing policy procedures must now be published on the Academy's website. So that's now a must, so you must make sure that happens. The risk register. The risk register is now a must be reviewed at least annually by the main board, and the main board should not delegate the responsibility for maintaining and reviewing the risk register to the audit committee. So again, it needs to be minuted at least once annually that the main board have reviewed the risk register and made sure that it is updated as necessary. Audit committees. The audit committee actually has now been renamed in the SFA, the AFH 2020, as the Audit and Risk Committee. The point here is that audit committees must now report to the board on non-financial and financial controls on an intermittent basis, depending on the amount of work that's done on internal controls during the course of the year. There is a large part in the AFH on the internal scrutiny. I will return to that on a later slide. The final change relates to the Audit and Risk Committee. There's now some more detailed guidance on the requirements of the Audit and Risk Committee, and I'll just read those out to you. The Audit and Risk Committee must review the external auditor's plan each year. So typically at the start of an audit, you would receive a letter from the auditors outlining their plan for the audit, how the audit is conducted, what the risk areas are, what the timings are, etc. So we would typically send that out 2 or 3 weeks at least before the start of the audit, and then get feedback from the chair of the audit committee or the accounting officer. They must be responsible for the annual review of the annual report and accounts, and also review the auditor's findings report and the action taken in respect of those findings. Here's an interesting point now. They must assess the effectiveness and resources of the external auditor, provide a basis for decisions by the trust members about the auditor's reappointment, dismissal and retendering. It was brought in the Academy's Financial Handbook 2019 that decisions regarding replacing auditors are with the members, and I think this is obviously to control the situation perhaps where people within the school for one reason or another didn't like the auditor. Now, not liking the auditor is not necessarily a reason to get rid of the auditor. So the actual ultimate decision with replacing auditors is with the members. It's now a requirement of the Audit and Risk Committee to produce an annual report on their conclusions as to the effectiveness of the auditors, and to recommend reappointment, dismissal or retendering of the auditor. So that's something that will be required this year post-audit, and I would suspect be discussed possibly not in time for the board meeting to approve the accounts before Christmas or in early January, but perhaps sometime early in the spring. So that was hopefully not a too rapid run through of the changes brought in by the Academy's Financial Handbook 2020. As Michaela mentioned earlier, if you get the chance to answer any questions that you put forward during the presentation, we will try to answer them online, but in any event we'll probably produce a paper of all the questions and answers, a fact sheet afterwards to forward on to you. So now I'd like to pass back to Michaela to talk about the Academy's accounts direction.
Thank you, David. So again, you've been sent the fact sheet that we pulled together for you, so you don't have to go through the whole of this document. So that was sent with the joining for this course. So this accounts direction is applicable for the August 2020 accounts that you're all having prepared now. It was produced a little later than was originally planned by the ESFA, but was issued in June eventually. And most of the changes in this year's Academy's accounts direction around the Trustees report, so that part of the accounts that you are responsible for. So in our monthly Academy newswire, we send out the sort of summary fact sheet on this. And so I'll just highlight some of the areas of the things that you need to look out for. So if you're a large Academy trust or a multi-Academy trust, then in addition to the accounts direction, there is also the Carbon Reporting Good Practice Guide. And again, there's a link to that in the accounts direction itself. And that has a guide to assist you with the additional disclosures that are required around this, and this is new this year. So do take a look and see whether that's applicable to you. So in terms of being large, large is defined as if you meet two of the following criteria, being more than 250 employees, having a balance sheet gross assets greater than 18 million, or income greater than 36 million. And also you'll need to have consumed more than 40,000 kilowatt hours this year. So a few things to test and see whether you are large or not and whether you need to look at that reporting. I just wanted to highlight that to you. So the disclosure changes that are coming up in the Trustees report is that now if you have more than 250 employees, then there's a requirement to disclose how you engage with your employees. And there's some good example wording given on page 90 if you wanted to take a look at that, but obviously tailor it to your Academy. If you're a large Academy trust, you also have to put in a paragraph about how you engage with your suppliers. And again, they're giving you some example wording. Under the heading Objectives and Activities that appears in the Trustees report, you'll now need to expand upon that a little bit and put in there a paragraph about how you've measured your success. And now it may feel like it's been a really tough year, but I'm sure there are some successes out there that we should all shout about a little bit more. Again, the paragraph in the Trustees report under Going Concern requires more commentary this year, and the ESFA have published a good practice guide on this, and again the link to that is on page 92 of the AAD. And then a comment again in the Trustees report around the Streamline Energy and Carbon Reporting, or SECR for short. And then there's a good link in there on the fact sheet, and you'll see it on page 96. So moving on to the next area of the financial statements that has changed a little bit is the governance statement. And in this statement this year, because of the changes around internal scrutiny, you are now required to state how your arrangements have been affected by the new FRC, the Financial Reporting Council Ethical Guide, i.e. how you've made arrangements to have your internal and external audit facilities split. You also need to state in that statement if how the trustees have reviewed and taken into account the governance handbook and the competency framework. And I refer you to page 99 for that. If the answer is that you haven't yet had chance to look at that, then I do suggest that this goes on your to-do list, as this will be one of the areas that the ESFA will be interested in. The next statement that's been amended by the AAD is the Statement of Regularity, Propriety and Compliance. And in this statement, it is now a requirement that any material irregularity now needs to disclose an amount next to it. It's always been seen as good practice to do so, but now it is a must. And therefore the figure that the accounting officer puts on this statement should then also agree to the figure that we as auditors refer to in our part of the statements. In the notes to the accounts, there is now a requirement to have some clearer guidance in your accounting policies around group mergers and accounting, and which academy trusts are included and not. And also in the charitable activities note, there is now a requirement to split out legal costs now between legal costs incurred on conversion and then ongoing legal costs. In the funds note of a multi-academy trust, there is a requirement to disclose per academy of trust the individual academy balances that are brought forward and carry forward, and a requirement in the cash flow statement to note down the net debt. And this really is driven by the charity SORP rather than the ESFA accounts direction. And this really applies to you if you have any Salix loans. And the final note in the notes to the accounts that changes every year is the pension note. And this is around the teacher's pension and the LGPS pension. So new this year, after the AAD was issued, a supplementary bulletin was issued the following month in July. And this was to pick up and reflect any COVID events in your accounts, and also to pick up the point about any exceptional cost funding that you as academies might be applying for, and that would need to be reported on now in our regularity audit to make sure that the claims that you've put in were true and genuine and comply with the guidance that was issued. And that will form a separate note in the accounts. So if you've had to furlough any staff or have received any funding, then that will go into that separate new note in your statutory accounts. We've also, as auditors, been guided to look at procurement policies, and there was a change in the procurement note PPN 0220 issued in June, and we've been asked to have a look to make sure compliance has occurred in that area. And then in the trustees report, this new bulletin has recommended that some wording is put in for you, by you as trustees, about the impact that COVID has had on your academy school. So yes, that was a quick run through of a rather large document, but I'll hand back now to David to take you through the quite meaty subject now of internal scrutiny.
Thank you, Michaela. Yes, so we're talking here about internal scrutiny changes brought in by the Academy's Financial Handbook 2020, but I'll also return to just for a reminder of what happened in 2019. The first thing to point out, which is obviously quite a significant change for a lot of academies this year, is that following the ethical standard produced by the Financial Reporting Council, which was issued in January 2020, external auditors can no longer act as both internal and external auditor with effect from 1st of September 2020. So I'd imagine that of the number of academies in the UK, a significant proportion of those will have used the same firm of external auditors to do the internal audit report. And indeed, of our 36 academy clients, I think it was 17 of those also used us for internal audit. So we've had to say to them that we can no longer act, but we have offered help and assistance in finding alternatives should they require. So if you haven't already done so, if it applies to you and you haven't already done so, it's important to try and find new internal auditors as soon as possible. There has been a bit of a wheeze in that the term internal auditor, internal scrutineer were sometimes seen as being different roles, with internal audit being financials relating to the numbers and internal scrutiny being not necessarily related to the numbers. But in order to clarify any misunderstanding here, the ESFA have pointed out that internal audit and internal scrutiny should be seen to be exactly the same things, and that the external auditor cannot do both. So in terms of finding alternative provider, I suppose the first thing to say is I did say that it had to happen, but I don't think it has to happen necessarily before Christmas, because in terms of the actual number of internal scrutiny reports that are carried out each year, there's no set amount. Quite typically in the past, we've carried out our internal scrutiny in the spring and summer terms, typically February, March, and then June or July, with the autumn term being covered by the audit findings report that is a byproduct of our audit, which gives coverage over 3 terms. A lot of academies do like to have internal audit every term, but it's not compulsory. Obviously, if you've got to make an alternative provider and you want an internal audit report done before Christmas, then it's obviously important to get another firm in place rapidly. Alternatively, you want to have your next one done in the spring term, then obviously it's not that urgent. In terms of finding an alternative provider, the Academy's financial handbook does also state that you could use a trustee, a non-employed trustee who's got the relevant qualifications or experience. There are specialist providers out there that we can give details of, and there are obviously a lot of other audit firms who do offer the service. It may well be the case that the school business managers are being bombarded at the moment with letters. We've certainly been getting lots of letters from other firms saying we can offer. So if anyone out there, if any of the academies out there are struggling to find an alternative, please don't hesitate to contact us. We can help you with that. In terms of specialist non-financial internal audit and scrutiny services, the Academy's financial handbook requires that internal scrutiny must cover both financial and non-financial controls. And if there's a particular area of specialism that the existing internal auditor cannot provide, then you should use individual organisations or specialists to carry out those services. So, I mean, typical examples of non-financial audit, internal audit would be safeguarding or whistleblowing, premises issues, data and IT issues, GDPR, health and safety, disaster recovery, etc. So you can use a health and safety specialist, and that would count towards your internal audit. So just returning to the AFH 2019, there was quite a sort of sea change in the ESFA's required approach. I think it's true to say that in a lot of the cases in years gone by, they've been left to the external auditor to do his extended programme of work and choose what work was done, and then provide the report to the school business manager or the head teacher for them then to pass on to the Board of Trustees. AFH 2019 turned that on its head, with the requirement that the audit committee dictate the work that is performed under an internal audit programme of work, and that they should reference to the risk register for that programme. They should then direct the work of the internal auditor, who should then report directly to them rather than directly via the school business manager. So that's the process that should be in place. And I would expect that in most cases, well, that should be the case now. Another thing to mention this year is that AFH 2019 brought in the requirement that a summary annual report on internal audit was submitted to the ESFA along with the annual accounts and auditor's management letter by 31st of December each year. So this year will be the first year that the annual summary report has got to be submitted to the ESFA. Now, for our clients, we will be assisting with that. There has been an issue, as we all know, over the last 6 months with lockdown, in that it hasn't been possible in a lot of cases to do internal audit work. So this year, I think there may need to be a bit of additional thought into what goes in that annual summary report. It can be that there's been special projects that have been carried out by a non-employed trustee. There have been work in special projects done on other matters. So we'll be talking to the head teachers and the trustees about the content of that report and helping with the drafting in order that it can be completed by deadline, which actually is going to be, I think, a month later this year, because the SFA have relaxed the reporting deadlines by a month because of what's happened over the last 6 months. So I suppose to recap, if any trusts out there are having problems finding an alternative provider, then please make contact with us and we can help put you in touch with a number of alternatives which you can follow up with. So I think that's it on internal scrutiny. So I'll pass back to Michaela for general updates.
Great. We're going to cover these 5 areas which we thought would be helpful for you as trustees. I will cover the first 3 and David the remaining 2. So firstly, I thought we'd pick up the accounting officer letter, which was issued back in July, on the 20th of July. And hopefully you've received this from your clerk and it should be sort of circulated to the board. And I'll just highlight a couple of areas that are particularly relevant for you as trustees. So in that letter was a highlight around fraud risk management. And obviously there is still a constant risk in that area. And the ESFA are worried around the protection of public funds. And of course, we all know cybercrime is getting more and more complex. And I'll come back to this on a later slide. The other area that was highlighted in the accounting officer letter was health and safety. And I put up there the acronym GEMS. This stands for Good Estate Management for Schools. And there's a good guide that was launched originally back in April 18 that has been looked at and revised and updated. And we'll send you a link to this when we send the recording to you tomorrow. It'd be a good idea to have a look at it. And if you're not already using it, see if there's any pointers in there that can help you with your buildings and management. Also in the accounting officer letter was the highlighting the fact that the Academy's annual report and accounts has been published for the period to March 19. And that letter was encouraging you to take a look at this as it would help with your understanding of the sector at a macro level. Right, so I'll then move on to the timetable, which also was in that accounting officer letter. But what we've done here is we've set it out in more detail, hopefully to show you what the old and new deadlines were. So up until the 26th of August, the SFA was still holding out and hoping that all the schools would make the original deadlines. But I know the sector and us as auditors were asking for there to be some leeway and for the relaxation of you being reported if you hit 3 returns late. So what we've got here is the old and new, and what we as auditors are trying to do is to work with our schools to try and meet the original deadline. But in the background there, we know that there's in most cases, at least 1 month's leeway if it is needed. So starting at the top, the budget forecast return covering a 3-year period. The deadline for that was Tuesday this week, so hopefully you've all seen them and approved them, and they have now been submitted. That was delayed originally from July. The next on the list is the Land and Buildings Collection Tool, and this is coming up in the next 2 months. It's now been delayed to December. But of course, it can be submitted early if your business managers have the time to do so. Next is the School Resource Management Self-Assessment Tool, a little bit of a mouthful, hence why I've just used the initials there. This was a new return that came in last year, if you recall, and it was introduced quite late. So this is the first year of you having to complete it all. And again, it's another return that needs to be signed off by the trustees. But this one has been now extended out from November through to the 15th of March. So quite a lot of leeway on that one. Your annual accounts and audit, and as David mentioned earlier, added to this deadline as well is the deadline to submit the internal scrutiny report at the same time as well. So this has been extended from the 31st of December through to the 31st of January. And it's really important to ensure that you know who is going to do this internal scrutiny report for you this year. Is it going to be your business manager, your internal auditor, or your external auditor? Doesn't matter who, but at least you need to know so everybody can get it in on time. So as I said before, we are going to try, if at all possible, to complete everything pre-Christmas. And I can't get away from using the Christmas word, I'm afraid. Sorry, I know it's still October. And then after that, the returns return to a more normal timescale, with the budget forecast return outturn in May and the budget forecast return for 3 years in July 21. There was one there that I just missed, which was the one regarding the financial statements on the website. They always need to go onto your website, obviously after the accounts have been published a month afterwards. So that's moved a month on, so you've got to the end of February. So on to one of the other ESFA focus points this year, the increased risk of fraud. There was a document published on this, an ESFA update back on the 22nd of April, and that was really driven because it's proven that in periods of instability like the pandemic, there is an increased risk of fraud. Your teams indeed may have been working from home, and processes and procedures may have slipped a little. And some of your teams may have been away or have been absent. So I know certainly we have seen the normal phishing frauds. We've seen the change of bank detail frauds in this period. And that won't be happening just to Academy schools, it's happening to all our sort of corporate clients as well. So fraudsters will take this opportunity to try and exploit your schools. And in addition, I think we all must be very wary that some people's personal circumstances may have changed. They may be under more financial pressure or stress than normal, and they may do things they would not have done before. And unfortunately, again, we have seen this. One example was a person taking some funds because they needed to fund their gambling habit. So this point was also highlighted, as I said before, in the accounting officer letter. And the real focus is that protection of the public funds. And there is an Academy Trust Guide to reducing fraud, and we will send a link when we send the slides to you. And I think it's quite a good time to revisit this document if you haven't already done so, and to see how you score in this area. So things like updating your firewalls and reminding staff not to open those phishing emails with those Trojan horses attached to them. It's all a good time to look at that sort of thing. So we will send you that link. There is also a guide which was originally published back in October 2016 and then revisited again, called the Anti-Fraud Security Checklist for Education Providers. And again, that's another good area just to refresh yourselves and see whether there's anything there that you could strengthen. It makes you consider, most importantly, do you have detailed plans to respond if something does happen to you? And who would you report it to, and when, and what are the reporting lines? There is also a more generic checklist for education providers on indicators of potential fraud. Again, we'll send you that link. And my final link is around cybercrime and cybersecurity. There's a guide for education providers which takes you through all the different types of cyber fraud. And there's new ones appearing every day. We can't keep up with them. But there are some ideas there about what you can do to prevent them. There's a sort of a quick checklist, 10 questions, and some strategic questions to consider as well. So overall, I think it's a good time to revisit some of these areas due to the circumstances we all find ourselves in. And rest assured, it is not just schools that are being targeted. Other charities and commercial businesses too are targets of fraud. David.
Right, now we'll talk about the LGPS pension scheme. Obviously, we see this every year as being a rather large deficit which sits in the balance sheets of academies, and also has impact on the statement of financial activities in terms of interest cost, actuarial movements, and also current service costs. So the first thing is, I suppose, to forewarn you of the impact on the balance sheet position this year of the 2019 triennial valuation, asset returns, the discount rate, and market expectations of inflation. Obviously, the really important valuation for the purpose of the LGPS is the triennial valuation, the last one being 2019, the results of which I think came out the early part of this year. And so those changes have been incorporated into the valuations that are currently being undertaken by actuaries for the purposes of producing figures for the annual accounts. So I think the first thing to say is that you will see some probably substantial increases in the pension liability this year. But I think the second point to say is that you shouldn't be overly panicked by this, because this is really a snapshot at 31st of August, and what really dictates the financial impact on academies is the triennial valuation, at which point the annual employers' contributions are and deficit funding are updated. We've been through a period, obviously, of turmoil over the last 6 months. So in terms of the first point, they're asset returns. So asset returns have been particularly volatile. The two main actuaries we see would be Aon, who look after Hampshire, Barnet Waddingham, we see in Sussex and Dorset. And again, they're both saying, obviously, that there's been very volatile asset returns over the period, and the actual increase in asset values will really depend on the mix of assets held within the fund. And indeed, in certain circumstances, there will be a reduction in the value of the assets over the period since last year. Then there's the next point is the discount rate. Now, the discount rate is used to discount future liabilities to pay pensions back to the net present value. And obviously, the smaller the discount rate, then the larger the liability as calculated. The discount rate is based upon corporate bond yields, and we're seeing that corporate bond yields returns as at 31st of August 2020 have dropped quite a bit from 31st of August 2019. And for example, discount rate used by Barnet Waddingham, I've seen in one case, has gone from 1.85% last year to 1.55% this year. So that's a 0.3% reduction, and that in itself would lead to a 10 to 15% increase in liabilities. So with low asset returns and big increases in liabilities because of the drop in the interest in the discount rate, we're going to see some quite substantial increases in the LGPS liabilities this year. The third point, to a lesser extent, is market expectations of inflation. I think there are expectations of small increases in expectation of RPI over the next few years, and also there's expectations of pension increases and salary increases of 2 to 3% over that period. So they will have an impact on the liabilities as well. In terms of the point there on full investment return information, this year, certainly in Hampshire, Aon are waiting until they've got full investment information up to 31st of August, whereas in prior year, I think they estimated up to the end of June. So as a result of that, the actual actuarial reports are not expected until the 16th of October 2020. So a lot of our audits are ongoing at the moment, but we won't have the information on the LGPS deficit until on or after 16th of October. I have, as an example, I have seen one from a Dorset school, and just to give you an indication that the actual LGPS liability at 31st of August was 1.7 million, and at 31st of August 2020 was 3.1 million. That's an increase of 1.4 million, so quite a substantial increase, which seems to go over and above the 10 to 15% the actuaries are indicating in their briefing reports. In terms of the McLeod liability, this was an additional liability that came in last year, and this was basically a court decision, I think, for the Firemen's Union, where it was deemed by the courts as being age discrimination, that when the scheme changed from being a final salary scheme to a career average earnings scheme, people within outside 10 years of retirement at that time were disadvantaged, and so the McLeod case, which was won by the Firemen's Union, led to restoration of their benefits in the pension scheme. So last year in the LGPS, there had been a past service cost increase for McLeod, which further increased the liability. This year, the McLeod liability has been updated for changes resulting from the 2019 triennial valuation. There's still final consultations ongoing as to the exact calculation of the McLeod liability. In view of that, the actuaries are estimating that this year, but they don't feel that there's any significant difference between the estimated liability and the actual liability. The final point there is GMP equalisation, guaranteed minimum pension equalisation. Last year, most schemes left that out on the basis it wasn't material. I don't think it's going to be particularly material, but there will be a provision made this year for indexation on guaranteed minimum pensions for members whose state pension age is on or after the 6th of April 2016. So again, I'm trying to be the bearer of bad news here, but well, what appears to be bad news, there are going to be, by the looks of it, some very significant additional liabilities in the balance sheet. But the point is that at the end of the day, these are long-term liabilities. They are ultimately underwritten by the government. The impact on schools arises from the triennial valuations, the next one being in 2022. So as things stand, contribution rates will remain unchanged from the 2019 triennial valuation. So that was a quick run through on the LGPS pension scheme. Then we're on to, I think we're running, you might be pleased or sad about this, and I think we booked 1.5 hours for the seminar, but we normally, when we sit in front of audiences, we have lots of people asking us questions, which throws us out of our stride, so we end up going 1.5 hours. It's slightly different, obviously, this time. But anyway, so that might be good news that we can get away just after 7 o'clock, perhaps. I think the final point here is sort of just a reminder of what can go wrong in academies, just to sort of be mindful. The SFA today published their, if you like, naughty list. As you're aware, that there were 3 returns, including the accounts and the annual accounts return, which, if you filed late, I think was it 2 successive occasions, then you went on the published. You are published. I think that list is now being extended to 5 of the returns that Michaela referred to in her timetable earlier. And today there were, I think, 23 academies across the country. I didn't recognise any, so I don't think there's any in our region that are on there that were named and shamed as being late filers of information to the ESFA. It's no surprise that certainly I've just outlined 3 recent financial notices to improve. It's no surprise to find that 2 of the 3 I've outlined are on that list of offenders today. I think these serve as sort of salutary lessons as to what can go wrong in academies if basically, quite often it falls back on lack of governance, lack of oversight by trustees, and so it's just a reminder, that to keep a close eye on what's going on within the academy. So there's 3 here. There's the Kenilworth Multi-Academy Trust. Now, financial notices of improve are all published by the SFA. If you receive the SFA daily bulletins, you may well receive these, but if you go online to the u.gov website and type in financial notices of improve, you can see all of these. I just picked 3 recent ones to show you what's going wrong in some of these academies. Now, the point being is that once a financial notice to improve has been issued, then that means that there's loss of delegated authority of the trustees. So basically the SFA hand over control to whoever they put in to oversee the running of the academy until such time as they're happy that the financial notice to improve can be lifted. So the financial notice to improve would be followed by a detailed action plan of the things that must happen in order for the notice to be lifted. So just a few things that you can see the flag points. I mean, the main reasons for financial notices to approve arising come from ongoing requests for financial report, cumulative deficits, fraud, whistleblowing, failure to balance the budget, late submission of accounts, qualifications in audit reports. So just to run through these quickly, in terms of Kenilworth Multi-Academy Trust, in this case, obviously within the, it's a requirement that disposal of freehold land and buildings requires ESFA prior approval. Clearly in this case that didn't happen. And they failed to submit their 2018-19 financial statements and management letter by the due date of 31st December 19, and the annual accounts report by the due date. So that's led to them having a loss of delegated authority and being put, if you like, on report with an action plan until such time as they've resolved all those matters. Herts and Essex Multi-Academy Trusts. This was a trust which kept on requesting financial support and then at the last minute saying we don't need it. In order to try and obtain the financial support, they failed to produce consistent and accurate consolidated cash flows. They incorrectly used revenue funds to support a capital project. The format of management accounts was not compliant. Just an interesting point on that one is that obviously, as for the Academy's Financial Handbook 2019, it is a requirement that the format of management accounts do include income statement, balance sheets, cash flow forecasts, and details on variance analysis and KPIs. Again, we do see varying forms of management accounts. Perhaps not all academies are complying the letter of the law in that respect. Budget forecast not compiled correctly, failure to balance the budget. Again, if quite often we see the SFA, if a deficit budget's been sent in, if it's significant, quite often the SFA bounce it back and say, right, we want you to revise this budget and show us your action plan you're going to take to make it balance. There's a lack of technical skills in the finance team. Again, there's a requirement for larger academy trusts, that is, I think over 3,000 pupils, to have appropriately qualified financial CFO in place. I wouldn't say it's necessarily always the case, but clearly on larger academies and multi-academy trusts, I think it's important to have the proper technical skills in place for the finance team. And the following ones, I mean, because this one was so long, I just put numerous breaches of the Academy's financial handbook. I think, I mean, this one went on to several pages. Failure to ensure oversight and management of financial decisions. Again, that suggests the board weren't taking a close look at the financial positions. Failure to submit financial returns on time. Failure to convene an audit committee. I mean, just to be clear on that point, is that we now refer to the audit and risk committee. Again, for large academy trusts, and I think that's over 50 million turnover, there has to be a separate audit and risk committee. But there's no reason why on normal academies and smaller multi-academy trusts that committee cannot be within another committee. So we often see the Finance Resources Premises Committee, the Finance Committee, various other names, but the Audit Committee should be within one of those committees. Failure to have robust processes in place to manage risk. Poor engagement in matters of trust governance by the Chair of Trustees. Failure of trustees to uphold their responsibilities. Failure to include all mandatory information on the Trust website. And failure to produce monthly management accounts to a satisfactory standard throughout 2018-19. Yeah. Again, these are extreme cases. I think of the several thousand academy trusts throughout the country, we only see a dozen or so of these a year. But I think it does just actually show that if you haven't got strong governance in place, things can quickly get out of control. So I think these are a reminder that these things do happen. So I think moving on to the summaries, I think it's back to you, Michaela.
Well, thank you. I hope that David and I have highlighted a few areas to you so that you're ready for this year's audit and audit meetings, and that you know what is different and what has changed, but also to have alerted you to what we have seen in the sector so that you can prepare for the forthcoming year, which we're already in. If you would like to sign up for our monthly newswire we send out, then please just email in to us. Hopefully it's a good summary of the things that you should be looking at in your academy schools. We haven't had any more questions tonight, so you know, please do send them in still. We'll answer them individually tomorrow. But otherwise, just leaves me to say that we'll send tomorrow the slides, a recording, and all the links that we mentioned to you all tomorrow, and you can share those with your colleagues. We hope tonight has been useful, and I hope you've been with us, as this is one of our first webinars. Very strange as a presenter, but hopefully you've got some key points out of it. So thank you all for joining us tonight, and I wish you all a good evening.